What a wild week this has been, not just for cryptocurrencies, but of course, the entire financial system. The first thing I want to discuss is what happened to FTX. I'll give you each piece, each detail that you need to know. The second thing is what's actually bigger than FTX. This is huge, in fact. And the third is what is Elon Musk's involvement in all of this? Well, I'll give you all the details you need to know today. Let's begin. If you stick with me throughout this video, I'm going to show you what you need to know, not just about cryptocurrencies, but the entire thing right through. And I want to break down, number one, that crypto peaked a year ago and investors have lost more than $2 trillion since. So it's been a wild ride. And now today, with what's going on with FTX, it's simply yet another level to all of this volatility. Crypto sell-off resumes as week-long FTX saga ends in bankruptcy filing, and that's what we are looking at today. So this company, FTX, ends up filing for bankruptcy after this suggestion that everything was a-okay. In fact, I'll show you more about that. And this is a tweet that kind of summarizes what happened. What happened at FTX is straightforward. FTX lent a US dollars 10 billion of client funds to their trading arm, Alameda, which used it for leveraged crypto speculation. Alameda blew up in crypto meltdown and can't repay. People got whiff of this and tried to pull $5 billion from FTX. FTX didn't have it. And so you see that this could happen to any company. It doesn't matter how popular it is. It doesn't matter if they have advertisements in the Super Bowl. Let me tell you that this can happen over and over and over again. And no matter how strong they seem on the outside, they could be much weaker on the inside. So let's go on. I want to show you that these were the magazine covers, and you could look at some of them. In the top right corner, the next Steve Jobs. And in the top left corner, you're seeing SBF, as he likes to be called, the next Warren Buffett. That's Fortune magazine, calling him the next Warren Buffett. So keep that in mind, the next Warren Buffett. Okay, let's look further into this. You could see that apparently he was a very big donor to the Democratic Party, as far as I'm aware. And you could see that at some point he had to step down from his CEO role as they went through their bankruptcy proceedings. Now, before this, before they had to go through bankruptcy and all of that, you had the other exchange, Binance, who came out and said perhaps, well, they actually gave a letter of intent that they would make an offer and look at the books and see what they can do in order to purchase the company or assets of the company of FTX. And they backed out because obviously they did not like what they saw. So here we have a guy who is the next Warren Buffett, making huge donations to the Democratic Party. And then the next thing you know, everything, his entire fortune is erased. So something went really wacky over the last little while. Washington turns up the heat on crypto darling Sam Bankman-Fried following FTX bankruptcy. And essentially what they're saying is, hey, we need to scrutinize and we need to regulate more because this company did some bad things with clients' money. And so you have Coinbase, who's obviously in favor of that. You have all these other companies out there that are actually in favor of it. Why? Because the more regulation there is, the more scrutiny there is, the more secure and safe people feel, and so they will put their money in. There will be more stability. But with all of that regulation, of course, takes away part of what is very attractive with cryptocurrencies, which the governments, of course, do not like. This, in my opinion, is what is bigger. Tether. Tether is a particular coin which is considered to be a stable coin. Okay, so essentially it's $1 US dollar to one Tether. Okay, this one thing is all supposed to be legitimately connected together, and unfortunately the Tether audit, which has been promised for 5 years, is still months away according to the CTO. Now, this article was posted on August 28th of 2022, and it just gets pushed back further and further and further. Now, it's very unusual that you have one of these currencies that is massive, absolutely massive. In fact, you can look here that it is the third biggest cryptocurrency right now, a market cap of $68 billion. Very big, okay? And so why is it that this company is unable to actually become independently audited? Now, they say everything's good, but if this one currency decides to, some information leaks from the company, and suddenly they find out, oh, wait a second, it's not fully backed. This would bring the house of cards down. All of these other companies out there that are likely doing the same thing, or could be doing the same thing, could be responsible for the losses that people take as a result. And we have no idea how far down the bottom can go, because there would be a lot of faith lost, not necessarily in, let's say, Bitcoin, but the stable coins, which are huge, they're massive. And then it just goes down the line. People say, well, you know what? What if this exchange is doing this with my money and that exchange with my money? What do I do? And so it starts a cascade. You may not lose faith in the Bitcoins and the Ethereums necessarily, but people get scared and they just sell regardless, because now they can't even hide in a stable coin. You see, a lot of talk about individuals hiding in Bitcoin during a bear market of crypto, and then when things start to get together, they can put their money into the altcoins. But in fact, what happens is that money goes into Tether and other so-called stable coins. That's what happens. So what occurs here, that we're in this level of deep bear market, and then Tether is exposed to not having the capital that they say they do. Well, then we're in big trouble. And that's what I worry about here today. Here we have it. I wanted to show you that in the space of days, FTX went from a $32 billion valuation to bankruptcy as liquidity dried up. That's the big one. Remember that, liquidity, okay? Customers demanded withdrawals, and rival exchange Binance ripped up its non-binding agreement to buy the company. Even the founder of FTX said, I effed up. So I wanted to talk about this briefly, that you have a company, $32 billion valuation. They've got the Super Bowl ads. They've got Tom Brady and Larry David and all these celebrities working for them. You have the cover of Fortune magazine saying the next Warren Buffett. And now liquidity, poof, gone. So this could happen at any moment. In fact, some say that it's like a Lehman type moment, at least in the cryptocurrency world. But it spills over because this is a very large company and they have a lot of assets, a lot of counterparty. This is important, liquidity. Now, why would liquidity be drying up? We have to understand what's happening on a macro level, and that is central banks today are actually pulling capital away, pulling their funds away. They're increasing interest rates and doing quantitative tightening. Depends on which central bank and so on, but in general. And it really shows us that when the markets change just a little bit, that we can have the spillover effect or domino effect in many other aspects. That's what's going on right now today. If Bitcoin was at 60,000, if we were still near record highs, none of this would happen. But suddenly everything has changed. Do you see what I'm saying here? So be very mindful of where your currency, where your cash, where your money, where your investments are. At the end of this video, I'll give you some tips that I think are absolutely prudent right now. Here we have FTX US suspends withdrawals according to on-chain data. This is just something, who knows, by the time you're watching this, it could be a different story. But they suspended their withdrawals. Who else did that? Crypto lender BlockFi suspends withdrawals in FTX contagion. BlockFi cites a lack of clarity over FTX status for the move. Interesting. FTX founder removes assets or fine flood from Twitter. He had posted that. He had said, everything's fine. Not an issue. A competitor is trying to go after us with false rumors. FTX is fine. Assets are fine. That was on November 7th. He said FTX has enough to cover all client holdings. We don't invest client assets, even in treasuries. We have been processing all withdrawals and will continue to do so. Isn't that interesting? But it turned out to not be true. And so it gets real messy when individuals are trying to stop the bleeding. They're trying to create a world in which, there isn't an issue. Crypto.com pauses withdrawals of USDC and USDT on Solana. What happened here? Well, you see that yet again, we're watching capital controls essentially takes place when liquidity starts to dry up, when there's a bank run. The exact same thing. And the reason I'm bringing this to you today, even if you don't have a dime in cryptocurrency, for all those who have stayed to this point, thank you for doing so. Understand what occurs. People start running for the exit and the gatekeeper shuts it down. Do you understand? Very important lesson that we can learn even if we don't have any money in cryptocurrency. At the same time, we're talking about these so-called stable coins. They're pausing the withdrawals. So what good are your stable coins or coins in general or currency in the bank in general if you cannot get that money out? This is so big. This is actually, let me read the quote. A lot of people have compared this to Lehman. I would compare it to Enron. And this is Larry Summers talking about FTX. Enron, for anyone who has read about this, I believe I read this in depth throughout the book, Infectious Greed by Frank Partnoy. And that is located, there's a link in the description of this video under my favorite books, which you can check out which one I'm referring to, but you can see for yourself Enron. Well, there was a big failure that had cascading effect as well. And what about Elon? Well, I need to tell you about this. So this guy right here, Michael Grimes, messaging back and forth. And by the way, this was from his emails that had to be disclosed, Twitter versus Elon Musk 2022. Do you have 5 minutes to connect on a possible meeting tomorrow I believe you will want to take? Elon says, we'll call in about half an hour. Perfect. And he says, Sam Bankman-Fried is why I'm calling. Elon says, look, I'm backlogged with a mountain of critical work matters. Is this urgent? Okay, look at this. Let me show you. Wants a 1 to 5. Be serious about partner with you. Same security you own. Not urgent unless you wanted to fly tomorrow. He has a window tomorrow that he's Wednesday, Friday booked. Could go to $5 billion, vision lock, would do engineering for social media, blockchain integration, all these different things, trying to sell them on a bunch of stuff. Elon says, blockchain Twitter isn't possible as the bandwidth and latency requirements cannot be supported by a peer-to-peer network unless those peers are absolutely gigantic, defeating the purpose of a decentralized network. Elon, okay, look, he goes, I got it. We'll forward the equity interest email to Jared and Alex, that goes on. So long as I don't have a laborious blockchain debate. Agreed. Was one piece of the equation. I do think he would have at least $3 billion if you would like him and wanted maybe more. Interesting. 3 billion he mentions, right? So then here, strange that Orlando declined. Please let him know that I would like to talk and understand why he declined. Does Sam actually have $3 billion liquid? I think he has it, yes. He said he had up to 10 at one point, but in writing he said up to 5. He's into you, blockchain, all this stuff. And then, if you look at the bottom corner, if you could see that, I'll read it to you. Maybe I have to zoom in here. Let me get this for you, okay? Accurate. He set off my BS detector. which is why I don't think he had $3 billion. He actually replied to this. I think it's interesting. So we're getting the emails, and then he actually replied to it. Hey, it's public. And he's saying, I don't think he had 3 billion. Now, he doesn't know what's going on, obviously, but he kind of got roped into all of this. Very interesting to see what has happened as this company started to crumble down rapidly, starting to grasp at whatever they could. Rumors continue to fly around SBF and the fall of FTX, essentially saying that he had been arrested on the tarmac in Bahamas on the way to Miami. What has happened there, we'll find out. But I don't know, there's a lot of rumors, to say the least. And then we have your friend, Bill Ackman. He came out here and says, hey, you know what? I want to stand behind SBF. He's a good guy. You know, you got to appreciate the fact that he said sorry, all of this. And then suddenly all this news starts coming out of what happened and he deletes the tweet. So just all these people are getting involved in one way, shape, or form. And I just think that it is complete chaos. But don't worry though, because the Wall Street Journal says crypto losses as a tax saving tool. There's a silver lining for investors who crypto holdings in taxable accounts rather than tax sheltered accounts such as IRAs. Look, if you took a loss, no worries. No worries, because you can write that out against your earnings. Or I guess since there's been a lot of losses in 2022, against more losses. Anyway, look, I just wanted to mention the fact that what we're seeing today should be a lesson to everyone. And I want to break that down right here and now. So let's look at this right here. The first thing that I wanted to touch on was that FTX used clients' money to take risky bets. Those bets lost as the market fell further. Like I said, if Bitcoin was at 60,000, probably wouldn't even have heard of this. The next thing is many companies saw their assets grow as clients saw crypto gaining. Once the trend changed, companies' problems started to show up. You sweep all that stuff under the rug thinking it's going to be a-okay, but eventually it comes on up to the surface. Tether is a stable coin that aims to have parity with the US dollar. However, it has never been audited and in my opinion is very dangerous. If you wanted to put it in and then transfer it out the same day, different story. But to actually keep your funds in there, I think people are thinking, yeah, you know, it's just like a bank account and I get 8% interest on it. Why not? Well, there's a big why not. Never keep your funds on an exchange unless you're moving cash in or out. That's the story I want to tell you right here. These exchanges are exchanges. They are not storage places. They are not bank accounts. Don't think of them like that. But people do so because they say, you give your cash to us or your currency to us, and we will give you a nice return. We'll give you 5% here. We'll give you 10% here. It's too good to be true. You know the story. If it's too good to be true, probably is. Hold on to your crypto offline, cold storage, okay? This is a non-negotiable. Don't think to yourself that you can get away with it, that, hey, you know what, everything's gonna be a-okay, because for a lot of people, it didn't. If they held on to the coin, the cryptocurrency directly involved in this, FTX had their own, then they would be erased. If they had something on the exchange, perhaps there's nothing left. This is the potential, but it's not necessarily always gonna happen. But you got to be smart with where you're keeping your money. And that's not just for cryptos, okay? Even in the banks. They can have a bank holiday. They could revalue your currency tomorrow and you will be stuck with nothing. So be smart about this. I hope you appreciate this information. And if you do, hit that subscribe down below. I'll see you tomorrow.